Hello there, it's Adrian CryptoBurb speaking. Welcome to today's Friday webinar. The time flies fast. It flies goddamn fast. That I can tell. Even though I'm about probably 7 days left before I turn 30, that's not what I truly mean. What I mean is that we are closing the weakest month of the year. It doesn't only mean that for stocks, it doesn't only mean that for Bitcoin, it means basically the weakest point, the weakest, basically kind of like a moment for the markets. And as a result, because it all transpires to how we feel, to our sentiment, how the economy prospers, it does weigh on everything. So we're gonna talk about this and more with my today's guest, Jeff Hirsch. And there's gonna be plenty of discussion, so hold on tight, hold your chair, and we can go. I saw you nodding head, man. I saw you nodding your head.
I'm a classic rock headbanger, man.
All right, man. I love that. Love that. Listen, welcome everybody again. This is Adrian Dunchik and your co-host for today, Jeff Hirsch, the legendary Jeff Hirsch, the legendary person who's behind the masters of the seasonal studies, the cycles. Somebody who's built the whole framework for tracking the seasonal patterns and throughout the whole year for traders. That's a walking gold mine of knowledge in person by Jeff Hirsch. And before we actually roll to discover all of the most important points, most of the I think intriguing concepts that we found out about crypto and Bitcoin, we need to first kind of like locate Bitcoin and see how it all corresponds with the rest of the markets. Bitcoin doesn't trade in vacuum. It doesn't trade in isolation. It trades in combination and coordination with other markets, right? This is a free market to an extent, like any other markets. There are no barriers per se, other than regulations, right? Some countries perhaps may not necessarily agree to it. Still, what matters is that there is this somewhat free flow. When there is somewhat of a free flow of information without much barriers, there is correlation that comes into play. And this correlation causes Bitcoin to react to what's happening on other markets. So let's give it a shot and see what's happening on other markets to start with. Let's take a look at a stock trust platform at major markets. Dow Jones Industrials, what a nasty rejection so far of the 200-day moving average, right? Let me take it in the black here. We're talking down 0.55%. Still, what matters is that we had this kind of like a powerful move to the downside overall. Again, fully subscribing to the seasonal weakness that we had August and September, just like clockwork. It's goddamn crazy how smooth it works for all the seasonal patterns that Jeff taught us as the industry up there. So we are kind of like may argue that there is some sort of like head and shoulders pattern, right? For those who love patterns. For those who love patterns, there is this neckline. Of course, it was broken. This neckline somewhat congested the line with the 20-day, 50-day moving average. All that matters is that the short-term and the medium-term trend, the medium-term trend, 50-day average on top, and the 20-day trend is kind of like falling. They're falling more and more aggressively in the increasing slope, right? So the aggression is there, the momentum is there. So there is a sharp rejection, sharp reversal to the downside, and it's actually right now at the point of a stalling 200-day trend, which so far until now has been growing, right? So which is fairly interesting because a stalling long-term trend kind of like tells us about a little bit of a neutral environment overall, right? That's the dominant tendency of the market to move sideways right now on average, averaging out the past 200 days of data. If we have a look at what's happening in the NASDAQ, there's even a little bit of green today, 0.05%, right? 6.72 points. Also below 20-day average, below 50-day average. However, it's way closer to those averages, right? And kind of like in a very much stronger bull market, if you will, right? The Dow Jones industry has kind of like slowed, while the NASDAQ Composite Index is basically ramping up and continuing to show strength and resilience, right? So even though there is, again, some sort of like a head and shoulders pattern, if you will, the neckline, right? We could argue and then have that academic disputes about what is right and what is wrong. Up here, what matters is that we have to see and acknowledge for those local, small, tiny local patterns that we have, right? And these local chart patterns tell us that there is this window, this breakaway gap, if you will, to the downside, right? It kind of like aligns with the resistance coming in provided by the anchoring effect, kind of like attached to the 20-day moving average, because we tend to pay attention to those averages. They kind of like point us in the direction to certain levels, and this level seems to be around the anchor of 13,500. So arguably, if we get if we stall here for a little longer, this may fall into a rejection. Still, what matters is that there is this relative outperformance when comparing the Nasdaq, the tech market, and the composites, in the industrials. Then S&P 500 down 0.33% today. There is a little bit of it's not necessarily an outside day, of course. It's some sort of like a dark cloud cover if we were looking at it from the local perspective only, right? However, of course, we need to put it inside the larger perspective. And the larger perspective is that it comes under a series of downtrending bars or candlesticks, regardless of what you're watching. So I wouldn't necessarily dare call that either the bearish engulfing or the dark cloud cover that typically comes after the series bullish, right? The bullish series. So here it's a little bit of some nasty looking day, not really strong, not really good. What's good, on the other hand, is that the market is moving up on average. Again, 4,200 strong round number support. That used to be the one unbreakable level basically in the past for the entire year until June, right? When it kind of like just slipped to the upside towards 4,600. So we're talking about this overall region where there might be a lot of interest from traders basically to pay attention to those levels, right? And what we know is that traders look at those averages, and because it's an average, long-term average is a good estimation, is the good estimate of so-called true value, even if the true value doesn't necessarily exist, right? Because who decides what is the true value? Who decides what is the true price of S&P 500? The market does it, right? So even if the true value doesn't necessarily exist, we tend to pay attention to the round numbers. We tend to anchor towards the averages as well for easy frame of mind, basically, right? So there's a lot of reason why we would wrap our orders around 4,200. So having a look at the ETFs, right? The XLY, the consumer discretionary is slightly up 0.24%, which is positive. We're only seeing 3 out of 10, if I'm not mistaken, 3, 6, 3. So it's going to be a little bit more than still 3 only green positions red. Everything is in red. The weakest of them all is the energy, which is 2% to the downside, which is pretty interesting. It's still trading somewhere closer to the all-time highs, which is inspiring, I think, right? Inspiring, and not so much for our emotions, it's inspiring for inflation. High energy prices are not really good for the industry, are not really good for the economic growth, right? Because it costs a lot. And when it costs a lot, you cannot really have a lot of disposable income in your pocket. And you cannot spend it on the markets, you cannot spend it on the goods, hence the economy stalls and the whole market just suffers. So seeing somewhat of a reversal setup, arguably again, for the energy might be some positive hint into what's coming. Still, we are far too early to decide whether it's reversed or not. The long-term trend has slowed. It's moving up slightly. However, there's definite slowing in terms of the momentum, right? That's what needs to be taken into consideration. Otherwise, the short-term averages, the medium-term average, the blue and the green one are pointing upward. So the short-term, medium-term trend is up. The long-term trend is up. However, it's slowing, so that needs to be accounted. Technology 0.18% again, similar to Nasdaq, just like we discussed. And real estate is at 0, which is pretty interesting. If we have a quick look at what's happening with the treasuries, of course, the bonds are leaking. And somebody should stop this. 113 points actually right here with the TNX. This is a 30-year bond prices, TNX going by the 10-year note yield index is actually again in a very rampant, strong, aggressive movement since May this year, right? So again, seasonal weakness, selling may go away, and we have this excellent person to talk about the seasonals and which patterns work and which don't necessarily work. We're going to talk about it with Jeff briefly. What matters is that while stocks trended to the downside or stalled, the yields basically moved up, right? And this is a very transparent move to the upside. The averages are again growing fairly aggressively. That's what I would say. The CRB, which is the Commodity Research Bureau Index, is also kind of like pointing to the upside, which is somewhat positive. That would be somewhat positive if it only kind of like regarded the precious metals in a way, right? Again, Jeff puts out so many valuable inputs always about the commodities as well. So perhaps he may share some stuff, maybe short with us. Until then, short to medium term trend up, short term trend up, curving up on the 200-day trend after a long winter. That might be somewhat positive. Gold is linking as well below the 200-day moving average support, which was rising. So this is a bull market still, right? The long-term defined dominant trend is to the upside. We broke through the support locally. We'll see what happens then. Silver, a little bit more aggressive, broader of gold. It's somewhat consolidating, right? There is a series of some climbing lows and declining highs. We'll see what it does. It's moving sideways at best, right? And the averages kind of like confirm that, except for 200-day, which is also moving up. Bitcoin and other cryptos are basically kind of like a 50-50, 60-40, if you will, right? Of course, we're moving sideways up here. There is no well-defined trend. It's sort of like a, triangular pattern, if you will, somewhere close to the $20,000 support, round numbers. Again, magical thing can make it all work. The biggest winner from what I can tell is going to be Tron, right? Why is that relevant? I'm not going to tell you much. And probably the last thing that is relevant is the dollar, the US dollar by the proxy of the UEP, which is the big bullish dollar fund, right? Is again transpiring very sharply, very strongly to the upside during the seasonal weakness of stocks. However, the seasonal weakness may or may not be due to end soon, right? So while we do not necessarily know what's going to really happen, right, we can have a look at the past data. And if we have a look at the past data, I can actually take it back here. Then we're going to take a look at the historical chart of Bitcoin, which is exactly this, right? And this historical chart of Bitcoin is part of the article that Jeff and I put together for you guys, right? This is the first ever seasonal paper, accredited seasonal paper with the CMT credentials, with the Stock Traders Almanac credentials, and beyond, with everything that goes into the legacy of Jeff Hirsch and his fathers. Basically, this is an excellent journey for the seasonal studies. And what this chart tells us is that the institutional adoption just takes place. It is actual. It is real. It's getting congested. On the daily basis, the ETFs are being filed for the applications, and the correlation is getting stronger. Bitcoin is trading more and more similarly to the tech stocks, to NASDAQ, which tells us that it might be a good alternative choice for those who are seeking risk, for those who are seeking risk outside of NASDAQ. And having a little bit of time, 10, 15 minutes or so, I'd love to invite Jeff, the very legend, the godfather of seasonal studies, as I call that. I hope you don't mind me calling that. Okay?
Godfather? I mean,
yeah, is that a good word or a bad word?
You can't not like that. Listen, there's a bunch of things you're talking about with the market that I want to chime in on a little bit.
Please.
I do a little technical analysis myself, and we know about the seasonals, but the main indices, the Dow, S&P, and NASDAQ that you're pointing out to, look like they're finding a little support there at the end of September around, 33,000, 13,000, and maybe 4,300 if my numbers were correct. However, there is some support below that. And from what we know of October and October phobia and, the selling that can transpire, I think we might be setting ourselves up for one of those typical October turnarounds. Not an 87 crash type situation, but maybe, a 2011 where we had sort of that mini bear and there was some craziness going on with the Congress and the federal government that we're seeing right now. So that may be more along the lines of what we're looking at. I mean, I've been looking for a 5 to 10% correction in stocks since that July high. And we're there. I mean, as of yesterday's close or as of the lows a couple of days ago, I think NASDAQ was down 9.9, S&P 7.4, and the Dow like 6.2 or something if memory serves. So it's happening. Do
you have some charts you want to display as well?
Oh, I could just talk.
Or you're just randomly spitting out facts.
I mean, I was just sort of responding to your update. I mean, I can show you some charts.
Easy, man. I mean, listen, I'm always surprised because you're literally talking this out of your memory, right? You're
This
literally
this is from memory. Yeah, this is from
Jesus.
I
That's another level.
I did Chart Summit with the CMT and All-Star charts the other day, so it's all in there. But I also updated my, maybe I'll give you a shout of the newsletter because we just put our monthly
Please.
You
just need to click on a present button. You just need to click on a present button, unless you want me to display that.
No, I got it. I'm just looking around. Remember, I'm still kind of a boomer.
All right. So you just need to click on a present button, and I'm gonna add it in.
See if I can October Almanac. Let's try that. Is it clicking? Come on, there we go.
Can I play it?
Yeah, this is my newsletter that we did last night. I mean, this is just showing the seasonal pattern. You love these charts.
I love them.
So while people are looking at this, you also mentioned some sector stuff, and you pointed out oil coming down a little bit. I just gassed up here, in the New York area, and it's a little bit more than it's been, but I found something that was about $3.50 a gallon, so it's not that crazy. Just a little anecdotal, but there was a seasonal short trade for the oil sector that we passed on because of the supply-demand situation that we're all aware of out there, where Russia and Saudi Arabia, et cetera, are not going to start pumping more gas or more oil, and none of us are slowing down our energy intake, especially some of the folks that may be miners who are involved here. That does take some energy. But the thing that I thought of was the seasonal low for energy stocks like the XLE type stocks is in December, and then the commodity low for the crude oil ends up being around February. So you've got this December, midwinter, to February period where energy tends to at a low point, and it may be setting up for that. But since it was diverging over the summer, we passed in those shorts. We did get short the stocks, the transports and the industrials, the XLI, the IYT, and the SOXX, which were nice short trades on breakdown in August. So, I mean, that's just a couple of things I was thinking of while you were going through your update that I thought I would share. This is what you're seeing on the screen here is, I think you got my mouse. This is just that NASDAQ aggregate cycle is all the seasonals, all years, plus the pre-election year, plus the third year of the decade. And then you have the purple line, which is the current year, tracking very closely to the pre-election year in a blue line. And then, of course, all years at the bottom. The support that I had mentioned that we might be seeing end of September, with the seasonal chart showing us this, low that tends to occur. I don't know if maybe you can highlight that. My mouse isn't really drawing that so well. Right there at the end of October, we might be in store for something like that, an October turnaround that we've seen in many, many years, even in pre-election years. And then the S&P, a little bit weaker, coming, below where the averages are on these one-year seasonal patterns. But the good news is that after, we could chop along here, through October and November, and then make that annual high that we tend to make for pre-election years. The strength of the fourth quarter, you and I highlighted in our piece the strength of the fourth quarter in Bitcoin. It is true for stocks. I guess one of the big takeaways for me on our whole opus that we put together, which was a joy to do with you, was the fact that, as Bitcoin matures, it's really tracking the equity seasonal cycle quite closely, just with more, more beta, which, it gives the sort of the risk-seeking folks that are, oriented or cryptos, what they're looking for. And then, here's the granddaddy, the 4-year cycle. And we made the comparison with the halving 4-year cycle and the presidential cycle. People need to understand that, the U.S. presidential election cycle, they have the election on the same day every 4 years. The first Tuesday after the first Monday. Whereas the halving is an estimation, and it depends upon the number of blocks in the chain. So that kind of is a little more fluid, which is all part of the whole fluid 24/7, 365 personality nature of Bitcoin and cryptocurrencies. But this is the 4-year cycle. And, I've talked to you about taking this with a grain of salt, or at least with some pause, because it doesn't always work this perfectly. Nothing really does. And this is, you're seeing the solid lines of the Dow, S&P, and NASDAQ in the current cycle from 2021 to where we are now. And the dotted lines are the history going back to 1949 through 2022 for Dow and S&P, and 71 through 22 for the NASDAQ. And it's just uncanny. It's firing on all pistons, and I sense from my experience and the fact that we continue to stay on trend here that this will continue through year end. We'll get a year end rally, and then we have a sitting president running for re-election that will help boost the market in 24. But after that, I'm getting, it might happen sooner, and we'll note that with analysis. But after that, we get into 2025. I think we might end up going into more of a sideways stock pickers, speculators, seasonal traders period for several years. But for now, this is the roadmap, and that's what we've been following. This is what we put out last night to our members at stocktradersalmanac.com. Here's a little table about down August and down September's, where September was at the time, and then what happens in Q4, up 88% of the time. Most of the years pretty solid, and even any of the years where we had positive year-to-date changes as September with this back-to-back loss, were all pretty good years. So that's what we're looking at right now. I don't know. Is there something you want to know from me? Is there something I can show you? Or maybe I'll show you the. Let me get a new share.
I was just trying to be smart, to play smart, and figure out some funny question for you to answer. But
all right. Well, I'll stall for you. I'm going to show you the MACD seasonal trading pattern.
Please.
And this is using the Trade Navigator software. Come on. Oh, there's the button. Sorry. Booming.
That's okay. Just need to click it on present, and I'm gonna add it.
I know, but then you got to pick. Then you got to pick which one you want to show.
The MACD is fine.
There it is.
I think it makes a lot of sense.
So I assume you guys, your people know what MACD is, right? Do we need to explain that, or we know?
I think we know.
All right. So here's the two MACDs that we use, which came out of Jerry Appel's original research, the guy who invented MACD. The 817.9. I know their software says F, but it's a 9-day moving exponential moving average of the difference. On the buy side, we're using the 817.9 when we look for this crossover below the zero line, right? 817.9 is the faster, shorter MACD because bottoms are usually more of an event. They kind of boom, happen a little faster, whereas the popping process in general of all assets tend to take longer. It's just the nature of the behavior of finance and investing and assets and securities. And then the 1226 we use on the sell side because that's the slower, longer MACD. But last year's sell signal was fantastic. April 22nd, we avoided this bear market, very prototypical midterm year bear market that you were aware of with me. We called our bottom in October. A lot of people called us crazy, but it worked. Best 6 months did quite well. We had our sell signal April. It has run a bit further since then. There's been the big AI, chip craze that moved it, but NASDAQ has the best 8 months. So we were able to stay in there a little bit longer. But here you can see that crossover, and you can see us setting up for the buy right here. And if people go and want to check out the newsletter, there's a free trial there they can grab if they click on something that says log in. You can click for the free trial, but you'll see that we're when we go long for the seasons, and right now we're in short-term bonds in this tactical switching strategy, the SHV and the SGOV. I own some of them myself, but we wait for the Dow, S&P, and NASDAQ to all have a new crossover signal after October 1st, the last month of the worst 6 months. or the worst 4 months for NASDAQ. So here's the NASDAQ version. You can see our October buy, our June sell, and we are now below, having avoided all this chop and volatility. Yeah, we missed a little bit of that summer rally. What we call this Christmas in July. Did you read that post? The last few days of June and the first 9 of July trading days, that is this sort of like mid-year NASDAQ rally, which just came right on schedule. And that's kind of what we're looking at currently. I could show you our outlook. Let me just, where did I think at the market at a glance? How do I change my share? I got to stop and reshare, huh?
Easy. Meanwhile, while Jeff is preparing, please, guys, if you're watching that on Twitter, I think that there is this new Twitter live button that is actually showing that we're playing live. If you're watching the live with us on Twitter, or on X, should I say, please feel free to drop a like and share this very post, right? Because this excellence of knowledge that Jeff is sharing, he's doing that for you. He's doing that for you for free. He's doing that out of his beautiful passion and something leading into 57 years of experience backed by data. And by this experience, I mean not only what Jeff does, also what his father did as the very pioneers of the seasonal studies, and combining that with the tactical strategies. That's pretty awesome. So hit the subscribe button as well. If you're watching that on YouTube, make sure you hit the notification bells. Drop some comments if you have any questions. We'll try to answer them on or off the record of the show. And yeah, do we have it, Jeff?
Yeah, this is just our market at a glance. We're not just seasonals. We look at fundamentals, technicals, monetary policy, and I guess geopolitics and current events gets thrown in there with that. And sentiment. I'm a big fan of investors' intelligence. We look at internals as well. There's a pulse of the market that we have that comes out of the indicator record book in the back of the Almanac that Yale created years ago. So this is just a quick look at where we're seeing the market right now. And, when it comes to stock picking, we find some pretty decent beta in our stocks. I mean, last year we picked Super Microcomputer at like 81.93, if memory serves, under like 80 something bucks. And it ended up being, one of the biggest holding of the Russell 2000 after the whole, AI chip craze, kicked in the summer here. So what we do is we wait for that seasonally ripe time for the stock market, and we go in and we sort through all the stock database using Zach's Research Wizard, and we find stocks that are have revenue and earnings growth and growth acceleration sequentially, quarter over quarter and year over year, with good valuations, PEs, price to sales low, good margins, good debt. We want them with just a little bit of relative strength, just sort of tracking the market, humming along quietly, not blowing out, not being and not falling apart, and also being underfollowed, only having a couple of analysts following it. We don't care what the analysts say. We just don't want a whole bunch of them following it. And this is where we find these sort of sleeper stocks that are doing great business, throwing out great numbers, and growing, and accelerating that growth. And then we have stops in there. It gets weaned out, throughout the year, the ones that don't make it. And then you just, let your winners ride and sell your losers fast. And then we sell half on a double. So take your initial investment off the table and let your winnings ride. And that's sort of the stock strategy within the seasonals, combining all the different disciplines, the 5 disciplines right here.
That's pretty awesome. Pretty awesome, ladies and gentlemen. Yeah.
Did you come up with a smart question?
No, man, I'm not too smart today. The only smart
for us, man.
The only smart thing that I can do is to show off what I'm holding in my hand, and that's gonna be this beautiful book, right?
Wow.
So let it angle, let it. Where is it? Is it gonna show off?
Oh,
it's
yeah.
Gonna show
There
off.
it
So
is.
that's the structural Almanac. That's what Jeff does and puts out every year. The new copy, I think, is out. My background is kind of like glitching a little bit. Hey, look, we are bookmates. Huh?
Mine's got notes in it.
Now mine's plenty of notes, man. So this is a shameless promo for Stock Traders Almanac.
The new one should be coming in the next several days. It'll hit the warehouse, and you can see on my pinned tweet how to get it. It comes with the subscription to my service. You get a free copy if you're a member, so you can hit that. And there's a discount promo code in there, of course. Excuse me. So check it out. And if people have questions for me, ask me something smart, and I'll respond on at Almanac Trader or otherwise.
Excellent. That's an excellent, again, call to action. I'm calling to your action, everybody, because again, I'm really honest. Jeff doesn't pay me. Hey, listen, Jeff doesn't pay me to say this. I really fucking love this book, right? This is such an incredible piece. I have plenty of notes. So many pens just ran out of ink, basically.
Oh.
So it's pretty excellent. Listen, Jeff, we're gonna have about 5-6 minutes before we need to turn the stream off.
Yes.
I'll have 1 or 2 questions, right? Because you and I, of course, put together this excellent piece, this excellent article that can literally serve as a certified frame of reference for traders to navigate through the bull market. And that's a kind of like a note, the author's note. Yes, it is a bull market, everybody. Let's make it clear.
Oh, yeah, the bull market started on October 12th. For the
October 12th. That's it. That's a bull market condition for S&P. And a little bit later, with 3 months later confirmation, it started for Bitcoin as well, after confirming the bottoming pattern in January 13th, or for other indicators in March, right? What I'm trying to say and what I'm trying to show is that we have this excellent piece. Let me share my screen real quick. That's the full article. This is a 5-page article that Jeff and I put together. Of course, it's a little bit too long to read it out loud right now, just quote it per se. However, Jeff is very much known, and with his trademark chart, that is only to be seen with what Jeff does. A combination of technicals, fundamentals, of course, tacticals, and every other thing. It also applies to Bitcoin. So talk us through. Let's take 2-3 minutes to talk us through what you can see and what's the main finding that you see in the Bitcoin 1-year seasonal chart from our article.
Well, we kind of said it at the beginning, but first, did you put the link in for people to get it in there?
Yeah, so we have that's a very good recommendation. We have the video, we have this in the video description for this link. If you guys watching that on YouTube, it's in the video description. There is a free link. That's a free article that you can get. You can hang it on your wall. You can print it. You can laminate this. You can do whatever you want. That's a very valuable piece. For some of you, it may be the most important piece you will have ever read, basically, right? So that's coming from experience.
What we see here and what we've done here, what I've done here is I've taken the history of Bitcoin and broken it out into a few different time frames. The beginning, the first few years were, pretty crazy for the volatility. You can see the numbers on the left-hand axis. I mean, 2,000% is, kind of incredulous. Even though we were up about 1,600, here in the first year. So all years in the black line go back to July 2010 when the data starts. 2011 to 2017 is the first full year through the last year before, as Adrian noted on the historical chart, when CME futures began to trade. And then on the right side scale is the most recent 5-year period, 2018 through 2022, plus the orange line of the current year. And the seasonal pattern presents itself here very much like the seasonal pattern for stocks, with a best 6 or 8 months from October, November through April, May, June, somewhere in there, and then the week 4 to 6 months in the May to June or July to September period. And it's clear, if you want to draw a little arrow there where the arrow already is, Adrian, that 2023 in the orange is tracking right along with the seasonal week period, and the setup is there. And we've all heard of sell a man, go away. I know Adrian likes my line, and I like to say you got to buy in October to get your portfolio sober. But for Bitcoin, perhaps it's just remember to buy Bitcoin in September. Remember.
I love this phrase.
Remember. We'll see. It's given us some time here, but there's a proving period right now for the currency, for Bitcoin and the cryptos. They got to show us that they can rally again in the fourth quarter, and that they can find support again at those halving levels next spring, estimated around April. So it's sort of going to be a time for the asset to prove itself to the marketplace and to the institutions.
That's right. That's very right. So remember to buy in September. Only when you said it out loud, it just basically rhymed in my head. So that's how slow I am. Regardless, everybody, this is the first ever piece that Jeff and I put together. We're gonna see what it takes us. So September again, the slower period, the seasonal weakness is coming to an end with October, right? With October basically starting in the next couple of days, next week. Typically, October 10-15% on average, up about 60-70% of the time. And we're talking about the aggregated, compounded, basically average growth. The average growth, sorry, of 50%, right, for quarter four. So typically, when you buy into quarter four, to buy at the start of quarter four and sell at the end of the year, you basically are up 50% every year. So that's on average. There's no guarantee. However, the averages are good estimators for what the true value can be, at least for setting up the expectations. So this article, come again, is free. You can get it under my pinned tweet. You can get it under Jeff's account. You can get it on the website that is indicated in the pinned tweet. So the legendary Seasonality article is ready. It's out. It's free for every single person watching this video right now, listening to us. You can claim your free copy with the link below. It's up here, and that's where you can sign up, click on a free link. It takes you to Jeff's website. That's where you can basically provide the details to claim it, and we're gonna mail you this free copy. Again, it's free. It looks like this. It's pretty fucking awesome if you ask me, right? But I'm biased because I took part and I had the honor to work with this legend that Jeff is. And by the way, by watching and observing the pinned tweet, you can also win $100. So tell me about how bad deal it is. You get a historical first article of this kind, and you can win $100. So I'd take it. I'd take the odds. And
such a deal.
That's it. That's it, my man. That's it. I love and enjoy having you talk and having you be with us here, Jeff, for the last 30-40 minutes. So this is, of course, very generous of you to spend so much time with us. We need to slowly cap and wrap the show. For everybody, again, if you're watching that on YouTube, make sure you hit a subscribe and smash the notification bells. You know the story. We need to kick the YouTube algo. These are strange days where a lot of bots are taking over with a lot of fake contents, when a lot of scammers are there transpiring again to the main stage. If you want to see more of the credible, reliable content that is based and backed by decades of experience, twice as long as I live, is what Jeff and his father concluded on the excellent works of the seasonal studies and beyond, right? Seasonals is just one piece of the cake for what they're doing. Make sure you hit the follow button at Almanac Trader, just like you can see at the bottom of the screen for Jeff's name, Jeff Hirsch at Almanac Trader. Again, beware of impersonators. There was a post earlier today from Jeff about the impersonators, so beware. Almanac Trader is the right place to be if you want to come and join for the quality piece. And do not forget, the free article copy is out there, and eventually we're going to need to take it off the website. So if you haven't picked up your free copy yet, make sure you hit the link that I have on my pinned tweet. That's going to take you to a free copy before we take it off. And that, ladies and gentlemen, wraps today's show. And hope you're going to have excellent weekend. And hope you've enjoyed this webinar as much as I enjoyed talking and listening to this legend talk. Thank you, Jeff, for coming up.
Thanks for having me again, Adrian.
Thanks. That's going to be all. God bless you, everybody. Let's talk soon.